U.S. Farm Report on the road from the 2025 Milk Business Conference is brought to you by Empower Dairy from Merck Animal Health. Only Merck Animal Health combines technology and biopharma products for a true full solution approach to dairy management. And by Igenity Dairy. The road to healthier, more productive cattle lies ahead with Igenity genomic testing. Are you ready to begin your journey toward genetic improvement?
Welcome back to U.S. Farm Report this weekend from Farm Journal's Milk Business Conference. Here to kind of navigate the dairy pricing market right now and milk pricing, talking about beef, talking about row crops, and really where we set today. And so we're excited to have Phil Plord as well as Rick Narabout and Chip Nellinger joining us on the roundtable today. All right, Phil, what a difference a year makes. I mean, last year we were talking about, decent milk prices and producers were excited. On the horizon, there were some concerns. But now, as we set a year later, why are we seeing so much pressure on the milk market right now?
Well, I think last year at this time and whatever year preceding that, we were asking dairy farmers for more milk, right? We have these huge investments in capacity, billions of dollars investment, and we kind of needed more milk. Prices were high, bring the milk. And, well, here we are. The farmers have brought the milk. They have brought the milk.
And so when we look at where we set today, how much production growth are we talking? And will that continue into 2026?
Well, yeah, I mean, the last two USDA reports, we were at 3.8, 3.9% growth. That's on the strong side of strong historically. We have the most cows since 1993. We're up 200,000 head. We haven't seen a number like that since the 1950s. So, we have delivered in size and structurally. Europeans have been making a lot more milk too. We can talk about that at some point. What's it going to take a year from now? I mean, I think that, low prices cure low prices. And it's a sad reality, but I think we're kind of in that, we've been in the more milk cycle, more money, more milk. And now we're in the less money, less milk. We're going to transition into that phase. But it's going to take a while. And it's going to take a while because beef income is a big deal right now. And it's creating a real question mark about how producers will respond to low milk prices when what I'm calling their cow-calf side hustle is making so much money.
Yeah, and we'll get into that in just a second. But Rick, before we do, I mean, you're really focused on Idaho. But as Phil mentioned, there was a call for more milk and dairy producers stepped up. So you look at regionally, how much more milk are we talking in your area?
Yeah, so Idaho, we've seen about an 8% year-over-year growth rate this year, which, to put that in context, the previous 5 years, we've been at a growth rate of 1%. And for us, the size of our dairy state, an 8% growth rate is 4 million pounds of milk a day that our producers have turned on. And really two primary factors there. One, as Phil mentioned, we've had good economics. It's been, 24, 25 have both been profitable years for our dairymen. We're seeing feed costs lessen, which is added to that profitability this year. And then we did see our processors take off their base restrictions for the first time in a number of years. So for the first time, our dairymen had that opportunity to grow at more than just a very modest rate. And there's certainly a lot of desire to see continued growth and to have families continue to expand their family businesses.
Phil, as you look at milk prices today, how do dairy producers survive this?
Well, I think the beef income's a big deal because, it's $4 a hundredweight, maybe $4.50 the way we figure it. And it used to be $1, $1.25, $1.50, maybe. And so that's providing some padding. I don't know. It's a predictable response for me, but a lot of these folks have risk management programs in place too. I mean, you had an opportunity to put big time coverage on 8, 12 weeks ago. And I think we have farmers that have done that. So that always helps propel things. And then it's like it always is, right? You stick to mind the little things and hunker down and, it turns around.
Yeah. We started talking about beef on dairy, Chip, a few years ago here. And as we look at it now, surviving these turbulent times, beef on dairy, as Phil mentioned, that has been a really integral piece of it. But boy, has the rhetoric on beef prices or cattle prices and beef prices, but cattle prices changed real drastically over the last couple months. Do you think the highs in the cattle market are in?
I think they're likely in, and it kind of is the opposite of what Phil was talking about, right? Eventually, high prices cure high prices, just like low prices cure low prices. Economics will work. So what has been slow is rebuilding the the cow calf herd, right? And I think the beef on dairy has really come in the last few years and kind of taken that function over with the lack of expansion, traditionally for the cow calf guy. And so I think that there's a little bit of a risk out there, or some storm clouds that yes, we're like, high prices, record prices, good money out there right now. Things look good, but we can't take our eye off the risk management side, because eventually these high prices will correct themselves, will readjust. So I think it remains important to be diligent about risk management.
But do you think the fundamentals are still supportive of strong beef or cattle prices, at least until the end of the decade?
Generally, yes, but does that mean we stay here? There's likely a lot of volatility coming. I do think we've gotten back to fundamentals, though, just in the last week or so, digested a lot of bearish news, though.
Okay. We have not talked because we had our Harvest of Thanks show. So we have not spoken since we saw the beef plant closure in Nebraska. We knew packers were losing money. It seems like that story has changed a little bit over the past couple weeks. But we see this Tyson plant closure in Nebraska. What impact is that going to have on shackle space and demand from these packers?
Yeah, it's a serious issue, obviously. But again, I think we've digested that, with the limit down day after the announcement of that, expanded limits the next day. We could have gone, another expanded limit, and we didn't. And now we've rallied sharply. So I think we've digested that. We've seen plant closures in the past. It's unfortunate for those towns that see that. A lot of that shackle space will be picked up regionally at other plants, though.
Phil, it's not all doom and gloom when it comes to the dairy industry. I mean, exports have been extremely strong. Do you think that can support milk prices into 2026?
I think we're going to be off to a slow start there because we've seen so much more milk in Europe. European prices are down. And so to compete for that export marketplace, like today, cheese got below $1.40 per pound. For the first time since October, our price now is lower than the European mozzarella price. We've been below since October. For the rest of the year, we've been cheaper, way cheaper than Europe, way cheaper than New Zealand. That's how we exported a bunch of cheese. And now the worm kind of turned. Europe got cheap. We had to get cheaper. And so I think it's there, but we lost a bunch of first quarter exports, I think.
Oh.
And so I think now we got to go buy them back.
We keep talking about Europe and the amount of milk production, the increases that we've seen there. So how much were you expecting? Because we knew that they would increase production. How much were you expecting? And then what have we actually seen, Phil?
Oh, I think people are saying, we might be able to squeak out 1%, kind of growth. And in September, they were at 4.3.
Wow.
And that's the equivalent of 6.9% in the U.S. because they're that much bigger than us.
Well, you talk about all of the uncertainty and all of the risk, Rick, and this political uncertainty is adding a layer onto this. So what are some of the things that dairy producers are navigating now and some of that uncertainty that's weighing on them as well?
Yeah, I mean, you've got all the political uncertainty that's out there. Realistically, though, it doesn't ever seem to slow our guys down. You look at the continued growth opportunities in Idaho, and we've got continued plant expansions. We're one of those states that's seen $1 billion of that $11 billion of investments come into Idaho. And so we're going to continue to have opportunities to grow. It's on those of us that represent dairy farmers to try and remove some of that political risk for them and try and address some of these political issues. But we're bullish in Idaho. We're going to continue to see growth. We've only had 2 years in the last 30 where our state has not grown milk production. And so we're continuing to be bullish, and we're the biggest ag commodity in the state, and we're going to just grow on that.
Chip, let's switch gears to grain prices real quick. We've seen some choppy trade when it comes to that. So are traders disappointed that now all of a sudden they realize maybe China isn't going to buy this 12 million metric tons of soybeans like they promised, and all of a sudden it's this epiphany, or what's gotten into the market?
Yeah, that's really the big thing in the bean market is just actually this morning we heard that, they're going to be on track for 12 million tons, but it will be by February. So before it was supposed to be by the end of the year. That's really what, no market likes uncertainty. And there's just no clarification on the details of this trade plan. The longer it goes, the more disappointing the bean market especially is going to become.
There's a lot of debate about this corn yield right now. We know that there were some phenomenal areas that did get some rain, but we had disease, we had drought, we've had a lot of things. Do you agree with USDA right now where they set on yield and production numbers, or do you think they can come down a little bit?
I have said all along for months and months, I think we're closer to last year, closer to 180. The USDA says 186. We only have one crack left in January. I'm not sure they're going to change much, but in all the producers we talk to, it's highly evident to us that it's somewhere well south of 186, but that doesn't mean USDA is going to change it.
If they do change it, will it be too late?
I think it'll help. The demand's still very, very strong out there on the export side for corn. I think if they came down 4 or 5 bushels in January, that would give us a nice rally into the first quarter. But to your point, even some of these export sales that are coming out delayed now still because of the government shutdown. The last 2 weeks in October, we exported 180 plus million bushels of corn. That would have helped back then to know that. Just a blip in the road right now. It's old news and it's not affecting the market.
Chip, Rick, Phil, thank you so much for joining us this weekend. We appreciate it. All right, we need to take a quick break, and then we'll have much more right here on U.S. Farm Report.